Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Wednesday. Good morning, everybody. Welcome to the Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Everybody had an amazing trading day yesterday. We're going to do what we do each and every day, take a look at the futures markets from an educational perspective, identifying potential breakouts and reversal ideas. So let's go ahead and dive right in. If you're new to the video, do me a favor, click that subscribe button so you get the alerts and hit that notification bell so that you really do get the alerts and then you know when we put the new video up. Let's dive in. So last night we had a live trading room session for TradersArmy.com subscribers. So there may be a few lines on here that were not on yesterday's daily market commentary, but we've rallied up into our 4-hour/daily area of supply. I'm using this area as an example of, we've come into a supply zone. Our bigger picture trend is up. If you are considering a hedge on some of your long equity positions, it looks like a decent time to do so. One of the things that we spoke about yesterday in the live trade room was some ways to hedge some of your larger time frame positions in case we get a little bit of a pullback off of some of these 4-hour and daily supply areas that we've moved up into the S&P as well as the Nasdaq and the Russell, with volatility being where it is now. As far as a short intraday trade, we've got our hourly level here. However, the basing before the level, we've hit it 1, 2, 3, 4, 5, 6 candlesticks. Very little movement out of this level since it was hit, and so usually that's a fairly weak sign when we have a lot of basing in front of one of these areas. The weakness that creates is something that will oftentimes make people a little bit more cautious about actually taking the short. Now, I will say this, for those of you that don't trade, we're currently trading at about 28.82. If you just trade you get rid of the Globex session, we're going to be showing a gap up into supply. So there is a chance that we will come down on the open out of this level, as gapping up into supply is oftentimes an opportunity to fade a gap. So I'm not, by the way, I'm not a huge fan of fading gaps, because there are some days that it's better to play the gap and go. The price is going to continue to run. But here's an opportunity if you do play the gap fade when we turn this back on. If you're not in the short at this moment, then one of the things that you may want to consider doing is, how do I play a faded gap? And you could just play the gap fade by getting short if it comes below maybe 28.78, right? Allow it to start to make a move down and then get short to allow you to play the gap, which would get you somewhere back into here for a small short-term day trade. Now, there's also the chance that prices are going to continue to rally higher, which is really ultimately the better thing, right? We would believe that we've got a better chance of price continuing to go up because our 4-hour is still indeed very strong. Ultimately, I think that we are a little bit, we've seen a little bit of extended move in that 4-hour chart, and I think that we could get a little bit of a pullback, but ultimately, even a pullback into this range here would be ideal. Nasdaq, very much similar in the Nasdaq. We're coming up to our 15-minute Nasdaq level of supply above us. I'm actually going to, leave it in place, just the numbers here, once again, in case you wanted to take that play the fade. For those of you that are looking at playing the fade, we set a little level in here for a potential reversal going forward for later if price does indeed move down into this region. Crude oil is continuing that march higher. We are getting a little bit of a rollover in the overnight hours. we need a little bit of a deeper rollover in order for a chance to get long. And so that's kind of what we're still waiting on, is a better rollover into a quality area of demand. But I'm not trying to short this thing, because then I'm really going against a strong 4-hour trend. Is it overextended? Yep. Is it, almost a parabolic move up? Yep. I'm still not willing to short it. Let's let price come back down into a quality area of demand as a chance to get long. In gold, we identify this little pivot area here. Actually, one of our members found this one last night where we talked a little bit about it. So a little level up above us in gold where we may see a bit of a reversal. And then I think there's a chance that we break down below this low because we are getting lower swing lows and lower swing highs. And, we had talked about the potential for those that trade the candle-to-candle style. Let me fix my candles here. I zoomed in the wrong way. Sometimes the zooming feature on this platform can be a little wonky. For those that trade the candle-to-candle style, we had talked about the chance to get short after a new printed 4-hour low on a candlestick, and we actually wound up. I was looking at this candlestick, saying if we get lower than this candlestick's low last night when we were in the live trade room, and our next candle actually did not give us a lower low. It actually gave us a higher high, and then the next candle gave us another higher high and a slightly lower low. So that's really tough to get short on that until I get a definitive lower low. All right, next let's look at our bond market. So yesterday we talked about a potential breakdown in the bonds. Off of all this basing. This is tough basing to take a breakout in, because sometimes you'll see price go one way then the other, but it did break out down to the opposing area here. My problem with getting short to getting long on this area is the basing in front of the level. Now we have come into our confirmation long area, but if you look, the basing before the level, nothing kills a level like basing before the level. That is really the kiss of death of a quality trade, is basing in front of a level, and that's what we're seeing. Because if you think about basing before a level, it reduces the profit margin, because we always look for our first opposing fair price value area in front of a reversal trade, and if that opposing fair price value area is too close, then what it does is it minimizes my profit potential in this position. And so we may still get a little move out of here, but I think it'll be a very small one at this point. In the Aussie, we had an Aussie trade. Now, I took the lines off, but for those of you that took our Aussie long, this was the level that we had in there yesterday, was this position here. So that level made a really strong move out of our zone. So if you're able to catch that Aussie dollar on the long side, congrats. It's going pretty well. I would take your stop and move it up underneath 71.07. If you didn't catch the long, take a look at possible, at maybe one of these areas here is a re-engagement point. I think that we may get a re-engagement point. Actually, if you look at it on even a smaller time period, going to like a 15-minute chart. Yeah, right around here, right around the Aussie market open, you may get another bite at the apple there at the Aussie market open. In the euro, so in the euro, we had our breakdown. Prices are rallying back up to a euro potential supply level. We've just given it a touch. Unfortunately, you got a really close fair price value area here. So we'll see if that one makes our move away. We had a little bit of a touch and go away from there, but we added this one in as a potential reversal. So let's see about that level later today. And then our Canadian dollar level, prices are moving very nicely off of our Canadian dollar level. We added this for a potential breakout to the downside last night if price gives me a basing in front of that area. But we've seen a lot of overnight strength in those currencies. Last but certainly not least, Great British Pound, Japanese Yen. In the pound, we've come into our hourly reversal area. This is a great picture of price trading right to the opposing fair price value area. So we came into our hourly reversal and immediately came into our opposing fair price value area. Price hit it, boom, shot back down, went right back up. Okay, so if you did take this short, I think now it's time to take your stop and move it to break even. And if not, you probably should have taken some money off the table right at this area here. Although, occurring depending on your time zone, that may have been a challenge, right? So some of you that are listening in the U.S. would have a hard time doing that because you're just not awake at 2 o'clock in the morning, 3 o'clock in the morning to see that structure form, and that's okay. Don't ever feel bad about missing an opportunity because you're sleeping. You still do need to sleep. In the Japanese yen, we had a nice little entry on our gap fill short. So that one hit entry and started to move away very nicely. So getting a really nice move off of our gap fill short on the Japanese yen. So let me know in the comment section if you were able to nab that one. Came down and hit that first target objective. I think that is our copper position. So looking at copper, we do have a little reversal in our copper trade. Now I will say this: price has traded all the way to the tippy top of the level. And once again, my fair price value area is right about here. So fairly close profit objective in that one as well. So, today is a good opportunity to maybe take a learn and see, is there a chance to play the gap fade or do I play the gap and go? Because we're definitely going to have a gap in the U.S. equity markets. And so keep an eye on that one. Leave me a comment down below. How do you play equity market gaps? I'd love to hear that from you. How do you play equity market gaps? I think it's good to know what each person does a little bit differently on those. But until tomorrow, I hope you guys all have a great trading day, and I will talk to you soon.